Hey guys, good day, good evening, wherever you are. Tutorial number 3, we're going to look at the income tab and we're going to be putting in your salary amounts and superannuation, working out the tax and then spreading the percentages across our accounts. So first of all, we've got Bruce and we've got Betty. So Bruce, we can change the title to your name here. Betty, we can change the name or we can delete if single. I'm just going to probably zoom in on this actually so you can get a better look. Just cancel the zoom function there. And then we get to the first one, which is quite tricky this, so I just need to explain it to you. Select if your salary amount is pre-super or post-super. So I get paid an annual salary that is pre-super. So my employer says to me, for instance, Matthew, we're going to give you $80,000 a year pre-super, and from that the employer takes 9.5% off me and takes off any bonuses as well. So we're going to put Bruce in as pre-super. Then we're going to say that Betty is post-super. So Betty's employer says to her that we will pay your super for you and we will give you an annual salary of, let's say, $50,000. So Betty gets paid post-super. And the distinction needs to be made so that we can work out the amount of super to be paid accurately. So we're going to put Bruce's salary in here. Let's put Bruce in as 80,000. And then Betty is post-super, so we need to put the post-super in the next line down in row 9. So we said 50,000 for Betty, didn't we? Now you can see what's happened at the bottom. The annual gross, Bruce's annual gross is still 80,000, but Betty's annual gross is actually 54,750. So that's the distinction. The delta between the two is only 25,000, not actually 30,000. Enter the percentage of salary sacrifice is the next one. So Barefoot says we should be salary sacrificing 5.5% to get us to 15%. So that's what we're going to do. 5.5%. So we're healthily running on the treadmill. We're making use of the compound interest within our super to boost our super towards retirement. So we put 5.5 in, so what does that do further down? I tell you what, I'm just going to move these comments out of the way. If you click and hold, you can just drag that out of the way and we can see a bit better what we're doing. Annual gross income for Bruce is 80,000, annual gross income for Betty is 54,000. Super, Bruce's super is just under 7,000, Betty's super just under 5,000, and then the salary sacrifice we've worked out, so this is 5.5%, so that's 4,000 for Bruce and 2,700 for Betty, and then the combined super 11,000 for Bruce, 7,500 for Betty. So after all those deductions, we take off the 6,000, the 4,000 from the 80, we get down to 69,000. That's Bruce's taxable income, and then Betty's is 47,250. So now we need to work out the estimated tax that we're going to pay on that 69,000. So we can just scroll down to the calculator, the ATO calculator on here, and just give it a click. If it doesn't work for you, copy that and paste it in, or you can just go straight to the ATO website. You can find the calculator quite easily. So we're going to say for the last tax year, that's all you get, but that'll be good enough for what we want to work out. Enter your taxable income. What was Bruce's taxable income? It was 69,041. 69,041. Resident for the full year, yes. Click on submit. So Bruce needs to pay 13,985 in tax. Let's put that in. 13,985. Betty's 47,250. Back to the calculator. Go down to restart. 47,250. Resident for the full year, yes. Submit. Betty's paying 6,903. 6,903 in there. Now down to the Medicare levy amount. Again, we've got a calculator on the link below. Just bowing up the calculator now. So again, for the last tax year that it gives us, we've got Bruce's 69,041, wasn't he? Were you eligible for seniors? No, it wasn't. Dependent children, we're going to give him 2 children. Did you have a spouse? Yes. What was spouse income? I think it was 47,250, wasn't it? I think it was. Were you eligible for Medicare levy? No. Let's do submit. So Bruce needs to pay 1,380 in Medicare levy. Put that into that cell, which is D19. 50, I think it was 1,350. Same for Betty, 47,250. Let's restart. 47,250. Not eligible. 2 children. Did you have a spouse? Yes. Spouse's taxable income. So Bruce's taxable income was 69,041. Not eligible for Medicare levy exemption. So Betty needs to pay 945. 945. Any surcharge? We're going to say that they're not going to pay any surcharge because we've got private health, and we'll put that in the expenses in one of the following tutorials. Now, this non-taxable income has come up a few times, generally for childcare support, disability, family tax benefits, but we're going to use it for room and board. We're going to say one of Betty and Bruce's children, let's say, is 19 years old, working at Woolworths up the road. They need to be paying board just to help the household out. So let's say they pay $50 a week, $200 a month. That's 2,400 a year. Let's stick 2,400 a year. It doesn't matter which column you put it in. So that means that Betty's monthly income has actually risen up to 3,483, giving a total income of 7,953 for the family. And then we need to spread that across the accounts. So we're going to spread that across the accounts the Barefoot way. I'm going to put 60% in expenses, 10% in Smile, 10% in Splurge, 20% in fire extinguisher, and with budgets at 100%. I'll just show you what happens if we go over budget. So 15% in Splurge, that'll go to red, so that tells you. Got conditional formatting in. Red is bad, green is good. So let's, and blue is neutral. So let's knock that down to Splurge. What you can also do in here is where you can also change the name of the accounts in these yellow headers. So what we can say is we can call this one, instead of Smile, let's call it Happy. And that's changed there. You can see it just changed below. It's also changed on the expenditure tab, Happy in there, and it's also changed on our dashboard. So we've got daily expenses, Happy, Splurge and fire extinguisher. We've got our monthly budgets in, and we've got our annual incomes, monthly incomes, year super and estimated tax. On the next tutorial we're going to look at the expenses. So you can see that the expenses is currently blank. There's no data in the expenditure tab. So we're going to fill those in the next tutorial. If you join me for that one, thank you.